What's up everybody? Welcome to the Stocks channel. My name is Corey and today we had a very volatile day, but we did see the small caps and the tech sector closing in the green for the day. There's still going to be plenty of more volatility that we need to get through, so first up let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were down about 0.25%, and intraday we did start to break out to a new high, so we don't have an inside day, so we're starting to see this volatility expanding, and we're definitely still seeing some very decent volume. So this is the second day in a row closing back over the 5 EMA, and the next bullish breakout will be getting back over our 20 simple moving average, which is currently sitting just below 443. That's going to be a very critical level that the bulls need to break above, and the bears are likely going to show up at that resistance level and try to drive SPY lower. The next bullish breakout above our 20 simple moving average is going to be our 50 EMA, and that level is going to be sitting right around 448. So those will be your critical breakouts, and above the 50 EMA, we still will also have strong resistance at 450. So even though we're seeing some nice volume buying, and it definitely looks like the bulls are out there buying the dip, there's still going to be plenty of resistance levels just above. Remember from my weekend episode, I told you exactly what my opinions are and exactly what I expect to happen in the near future. So if you haven't watched that video and you're wondering where I think we go from here, I'm not going to repeat it. You can just go back and watch that video again because I still have the same opinion. Now from here, we're also going to have a minor resistance level at 439, and our very critical support levels you need to pay attention to are at 428, 420, and below 420 you're looking for a retest of the low at 411, and if we did break down below 411, you're looking for the full gap close at 400. We still have a very strong downtrend, and we're still well below our resistance level breakouts, so the path of least resistance is still lower, and remember the trend is your friend. If you're going against the trend, you need to have great risk management, and you need to know these critical support levels, and you need to have a plan and stick to it. You really can't start thinking about a bullish breakout until we at least see SPY back above 450, and that is quite a ways away, so we're not quite ready to say that this is a bullish breakout because we have no bullish confirmation. So far, we just see very bullish looking candles on high volume buying, and we have an idea that there could be a possibility the low is in, but we obviously have no idea, so we need to continue to follow the price action and watch these critical levels. Jumping over to the NASDAQ 100 triple Qs, we were up 0.3% today, and the NASDAQ 100 did have a very nice comeback day and did close in the green. And if you really think about how volatile it is out there in the market, this was actually quite the surprise. So you can see the triple Qs did test that level right around 341, and that support level did hold up, and we did close right on top of the 13 EMA. So from here, the bullish breakouts on the triple Qs are back above 352, and then back above 352, we'll need to see a breakout back above 362. So those are your critical resistance levels to pay attention to, and you can start getting a lot more bullish if the triple Qs can break above the 350s and then hold that level as support. Now in the near term, it's very likely we test that resistance and get a pullback, and if you're looking for support levels when we start to see a pullback, if we do get one at resistance, you're looking for a retest of 341 or 334. In the event that we break down below 334, again, that's looking a lot more like a bear market this year, and you're looking for lows down here all the way down around 315 and possibly as low as about 303.5. Remember, the support level at 323 was a gap close, and there's no guarantee that level is going to hold up as support. So if you start to see the triple Qs breaking below 334, you need to be a lot more cautious of more downside. We still have the bear trend, and we don't have a bullish breakout, so we have no bullish confirmation other than decent buying volume from the low. We've seen that before and we still made a lower low, so you can't completely rule out the possibility that this downtrend is not yet over. In the Dow Jones, we were down 0.35% today, but we still are closing back above the 5 EMA for the second day in a row. We have downside support levels at 338 and the full gap close right around 332, and we still do have our support level at 331.5. Remember, the longer we stay below 340, especially on weekly closes, it will look like a confirmed double top on the weekly chart, so watch that level closely. To the upside, you have major bullish breakouts above 347 and then getting back above about 349, so those will be your very bullish developments in the Dow Jones. Respect the downtrend and don't get overly bullish until we can at least get back over the 50 EMA. In the Russell 2000, we were up 0.4% today, and we did close back above our positively sloping 20 simple moving average for the second day in a row. So far, the small caps are looking a lot stronger at these levels, but we need confirmation of the bullish breakout back above 207 and definitely getting back above 212. When the small caps get back above 212, they'll be looking like they're entering a bull cycle, and then you can start considering getting bullish, possibly for that gap fill around 228. However, until we get the bullish breakout, you still need to expect more downside, because in the event that we do close below 191, we could still see the small caps trending all the way down to 170, so now is not the time to be getting overly bullish. If you're getting bullish, set your risk levels right around 197 and 191 because those will be the key levels of support that are breaking down to tell us that we're likely going lower. On the ARKK ETF, we were up 3.91% today, and we can see ARKK is starting to look a lot more bullish with 3 green days in a row, and we're sitting right on top of resistance right around 70.7. If we close above that level, it will look like a bullish breakout. It looks like we'll be getting back above our 20 simple moving average, and our next bullish breakout will be a close back above 79. Above 79, it'll be looking like ARKK might have put in a bottom down here right around $60. But if we get rejected at any of these levels, you still need to respect the downtrend and the fact that ARKK is still in a bear market. It's a downtrend until it's not, and you can't get bullish until you see confirmation of a bullish breakout, because going against the trend is surely the best way to lose money. So if you're going against the trend, set your risk levels right around 69, 64, and 60. And if we break below 60, we're likely trending down towards 50. On the VIX, we were up 9.32%, and we still need to be cautious because we still see the VIX elevated, and today the VIX did close above 30. We see the VIX is in a full bull trend, and you never want to get overly bullish when the VIX is elevated in a bull trend, because as you know, when the VIX is high, that means there's panic, and that typically means you're going lower in the near term. Now in the longer term, we need to see bullish breakdowns in the VIX closing below 24 and then closing below 20. So we're far away from knowing the market's bullish when we're evaluating the VIX, and right now the VIX is telling us to remain cautious and continue to expect more volatility and more whipsaws. On Bitcoin, we're currently up over 16%, and we're seeing a huge volume buying candle, and Bitcoin is back above all the moving averages. You never want to ignore a giant green candle like we're currently seeing in Bitcoin, and we are looking a lot more bullish if we can stay above 41,500. The next bullish breakout now will be back above 46,000, and if we can get back above 46,000, we could very well develop a bull trend, and Bitcoin will be looking a lot better. If we do get that breakout above 46,000, look for the next strong resistance right around 51,000 and then 53,000. To the downside, look for support right around 40,800, and if we do break below that, this was more than likely a bull trap. And if we fail to break out above the previous high, you're going to see a double top look, which means we're going to have strong support down here right around 37,000. And if we break below that, you're looking for a measured move lower. On NVDA stock, we were up 0.94% today, and we still see NVIDIA getting rejected at that resistance level at the 20 simple moving average, which is at 246. Your bullish breakouts will be back above 246 and then back above 256. And it will look like we have a confirmed double bottom if we could break above the neckline and close above 270. So NVIDIA will be looking a lot more bullish above 270, and in the meantime, you need to respect the fact that we're still in a downtrend, we're still below our resistance trend line, and we still have support down here at 236, 223.5, and 209. Below 209, we're likely heading back down to 197 or 192. On Tesla stock, we were up 7.48% today, and we're still closing below our resistance trend line, and we're still below our 20 simple moving average. Your bullish breakthroughs will be closing prices back above 882 and then back above 900. Back above the 50 EMA will require a close back above 930, and we'll be looking a lot more bullish if Tesla can get above 900 and stay above 900. Your bullish breakout above 940 could send us back to the next resistance at 996, but until we see that price action, you need to respect the fact that this looks like a giant double top, which means we could continue to see Tesla trending lower. We have the bear trend, we're below resistance, and there's no reason you should be getting overly bullish on Tesla while it's trading below $900 in a confirmed downtrend with a price target that could take it all the way down to $592. On Apple stock, we were up 0.16% today, and we did get the second day in a row closing back above the 5 EMA, but the next bullish breakout isn't until we get a close back above 168. Above 168, we'll be looking a lot more bullish with resistance at 170 and 172. To the downside, we still have support at 162, our support trend line at 160, and below that, we're likely coming back down to retest support at 157 and 153. The financial sector was down 1.48% today, and we do have a gap to fill down here below right around $38. So watch out for that gap fill because it is likely we will fill that gap while we are in a confirmed downtrend. The industrial sector was up 0.77% today, closing right on top of our resistance level. And if we do get that bullish breakout, you're looking for a retest of the 50 EMA. The healthcare sector was down 0.76% today, closing back below the 20 simple moving average and still trading below our resistance trend line. And we still do have a gap below to fill right around 127. The energy sector was up 2.47% today, and we did get a bullish breakout look, closing just above the previous 52-week high. From here, we could continue to trend higher, and we're very close to regaining the bull trend. So jumping back over the S&P 500, this is still a very volatile market with the VIX above 30, and even though we are seeing high volume bullish buying, you still have to respect the fact that we're in a confirmed downtrend. The trend is your friend, so don't be getting overly bullish until we get the confirmation of the bullish breakout and lose the bear trend. If you're trading against the trend, the odds are against you, but you can still do it by having great risk management and setting your risk at strong support. Otherwise, continue to short at resistance or be patient and wait till the market has more clarity. And if you're looking to go long, you can always set your risk at any of these levels. And as an investor, you really shouldn't be too worried about the near term, because as you know, in the long term, markets go higher. As long as you have great risk management and you have plenty of time to wait, you should have no concerns going long in this market. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQ and sends all of your buy and sell alerts directly via email and text message. With all of this market volatility in a brand new trading year, now is the best time to be a bank member. You can find out all of the information and how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.